Are you looking for growing, passive dividend income? Do you want to eventually retire on these dividends and start living the life that you want to live? If so, then you have to check out the rest of this video. Before we get right into this video, if you guys can, just please make sure you smash that like button. It really does help out the channel, and I really do appreciate it. Also, hit that subscribe button down below. We are growing here every single day, and I appreciate all of you that hit that subscribe button and join the family. Also, you can check out the links in the description down below for some free stuff. And by doing so, you will be supporting the channel as well. I want to thank you, but now let's hop right into the video. The dividend stock that we are going to be talking today is HP Inc. Ticker symbol is HPQ, and this one has been running rapidly in the past year or so. Now, what exactly is HP? So HP engages in the provision of personal computing and other access devices, imaging and printing products and related technologies, solutions, and services. It operates through the following business segments: personal systems, printing, and corporate investments. The personal systems segment offers commercial and consumer desktop and notebook personal computers, workstations, thin clients, commercial tablets, and mobility devices. Retail point-of-sale systems, displays, and other related accessories, software, support, and services for the commercial and consumer markets. The printing segment gives consumer and commercial printer hardware supplies, solutions and services, and scanning devices. The corporate investment segment includes HP Labs and certain business incubation projects. The company was founded by William R. Hewlett and David Packard in 1939 and is headquartered in Palo Alto, California. The listed name for HPQ is HP Inc. HP is currently trading at $31.82 at the time I am recording this video, and it is up a whopping 68% in the past year. In the past 6 months, HP is down just about a half a percentage point, so it does look like this one is still running rapid. But let's see if it's a good time to get in, or maybe if you should wait it out a little bit. So first we will be hopping right into their dividends, seeing exactly how much they pay. So they do have a dividend yield of 2.44%, which is an annual payout of 78 cents per share. They have a very small payout ratio of just under 21%, with a 5-year growth rate of 9.34%. Their dividend growth is 11 years, and they do pay a quarterly dividend at just 19 cents per share per quarter. Now let's hop deeper into the company and look at some of the financials of the company, since the dividend stats look pretty good, especially the dividend growth, in my opinion, looks very good. And with that low payout ratio, I do believe they will have them enough money to be going their dividend. But let's make sure that is true by looking at their free cash flow and other financial aspects of the company. So the first thing we want to look at is the shares outstanding. So in 2016, they went from 1.7 billion shares outstanding to the last reported of 1.15 billion shares outstanding. So they are decreasing their outstanding shares and buying back some shares, and that is something we want to see as a shareholder. They are increasing shareholder value, so that gets a big check mark for us, because they are the little piece of the pie that you do have. They are making it more and more valuable, and that's what we want to see when these big companies, we want to see them buying back some shares. So now let's hop into their financials and look at the numbers. So they do currently have a market cap of $36.52 billion with a small PE ratio of under 10 at 9.97. They have a price to cash flow ratio of 6.75. And their total revenue is $62 billion with revenue growth of 9.3%. Their gross profit is $12.83 billion, with total cash on hand of $3.45 billion, and total long-term debt is $6.93 billion, with free cash flow of $4.77 billion. So their dividend looks to be safe with that free cash flow. That is where the dividend comes from. So they do have a decently paying dividend that still has room to grow. And if you guys notice, their revenue is $62 billion, but their market cap is just a little bit more than half of that at $36 billion. So their current market cap is lower than their revenue, which is really good to see. And now this company has been up, like I said, 70% in the past year. So it is attracting investors and is really getting investor attention onto this play. But I do think it still has room to run, because I do think this one is still not valued at its what it should be valued at. So I'm thinking of a price target of around $40 for this one. So there is pretty decent room to run, which is sitting at just under $32 a share. So you have about $8 a share, in my opinion, for this. And why not collect a dividend while you're waiting for that price target? So I do think this one is definitely potential for getting into. I do have a lot of stocks on my radar right now, and this one may not cut it just because it is up so much. There are other ones that I'm looking at that got beaten down and are looking at better price points to get in at. But this one is up really a remarkable amount, and I do think that it is sitting still at a pretty decent buying point, even being up 70% in the past year. So let me know what you guys think about HP. If you guys are invested in them, if you want to invest in them, let me know down in the comments below. If you guys did take anything away from this video, or you did enjoy it, please just make sure you smash that like button. I really do appreciate that. Also, join the family, hit that subscribe button. We are growing here every single day, and I appreciate all of you that do that. Check the description down below for some free stuff. Yeah, it really helps the channel out, and you do receive free stuff, so it's a win-win for both of us. I really appreciate all of you watching, and I will see you in the next video. Peace.